This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia emerged as the second biggest oil supplier to India after a 3-month gap, overtaking Russia by a thin margin, while Iraq retained the top spot in August, data from industry and trade sources showed. India, the world's third biggest oil importer and consumer, shipped in 863,950 barrels per day, BPD, of crude from Saudi Arabia, up 4.8% from the previous month, while purchases from Russia fell 2.4% to 855,950 barrels of oil per day, the data showed. Despite Saudi's gain, the share of oil from Organization of the Petroleum Exporting Countries in India fell to 59.8%, the lowest in at least 16 years as India cut African imports.
India and other members of the Shanghai Cooperation Organization, SCO, will discuss energy security at the Regional Security Bloc's meeting in Uzbekistan, India's Foreign Secretary Vinay Quatra said on Thursday. The 2-day summit in the Silk Road city of Samarkand will be attended by Prime Minister Narendra Modi, Chinese Premier Xi Jinping, Russian President Vladimir Putin and Pakistan Prime Minister Shehbaz Sharif, among others. It coincides with a sharp rise in Indian imports of Russian oil, coal and fertilizer, a vital outlet for Moscow as it seeks to secure new markets after Western sanctions were imposed following the invasion of Ukraine.
Moving on to the top news in the energy sector.
Some trains carrying fuel components to the U.S. Northeast have been halted in preparation for a possible railroad shutdown in the coming days, two sources familiar with the situation said on Wednesday. The northernmost East Coast states rely on railroad shipments to supplement pipeline deliveries from the U.S. Gulf. The region is among the largest fuel consumers in the nation, where U.S. Energy Information Administration, EIA, data shows that in July inventories of heating oil and diesel reached the lowest levels in at least 3 decades. Major railroads, including Union Pacific and Berkshire Hathaway's BNSF, must reach a tentative deal with 3 unions representing 60,000 workers before 12:01 a.m. on Friday to avert a shutdown.
Oil futures fell about 4% to a 1-week low on Thursday on a tentative agreement that would avert a U.S. rail strike. Expectations for weaker global demand and continued U.S. dollar strength ahead of a potentially large interest rate increase. Brent futures fell $3.75, or 4.0%, to $90.35 a barrel by 10:50 a.m. Eastern Daylight Saving Time, 14:50 GMT, while U.S. West Texas Intermediate, WTI, crude fell $3.58, or 4.1%, to $84.90. That puts both benchmarks on track for their lowest closes since September 8. U.S. railway parties have agreed to a cooling-off period as a standard part of the ratification process after reaching a tentative deal overnight, a move that would avert any shutdown in case unions fail to ratify it, according to a source familiar with the situation. Next, we have the top news in metal markets. Aluminium prices gained on Thursday as Europe continued to grapple with a power crisis that has curtailed production of the energy-intensive metal. Other industrial metals such as copper, however, dropped on persistent worries that a global economic slowdown would curb demand. 3-month aluminium on the London Metal Exchange rose 1.2% to $2,297 a ton by 1500 GMT. About half of the European Union's aluminium and zinc production capacity has already been forced offline due to the power crisis, industry association Eurometaux said.
Iron ore futures rose on Thursday, with the Dalian benchmark hitting its highest in more than 2 weeks, buoyed by China's intensified efforts to support the ailing domestic property sector. Hopes that top steel producer China would ease its COVID-19 restrictions also boosted sentiment. Chengdu City said it would lift a full lockdown on Thursday in all districts still facing strict movement curbs with a recent outbreak now under control. The most traded January iron ore on China's Dalian Commodity Exchange ended daytime trade 0.7% higher at 722 yuan and 50 fen, $103.66, a ton, after touching its highest since August 29 at 736 yuan earlier in the session.
We will now look at the top news in the agricultural sector.
Indonesia exported 2.71 million tons of palm oil in July, including refined products such as biodiesel and oleochemical, down 1.28% annually but picking up on monthly basis, the Indonesian Palm Oil Association, GAPKI, said on Thursday. In July, the world's biggest palm oil maker produced 3.47 million tons of crude palm oil and 338,000 tons of palm kernel oil, GAPKI said in a statement. Indonesia's end July stock was 5.91 million tons, easing from June's 6.69 million tons.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.